Good morning, traders. Welcome to Wednesday, the 5th of July. My name's Marco, and this is the morning update from Phoenix Blue. Let's hope everyone had a great Independence Day in the US yesterday, and there's not too many sore heads today, ready to attack the market later on this afternoon and follow on the London session. So, what happened yesterday? Well, in terms of news, it was pretty quiet. What we did see was that the GBP construction services missed the forecast only slightly, but it was another day of dollar strength. So let's see what happens today with the services PMI, forecasted 53.6. Remember, 50 is the magic number. This shows expansion within this sector. So anything over 50 is showing expansion. So can't be too disappointed over 50, but really what we need to see is we need to see a number bigger than 53.6, something bigger than what's forecast, try and halt the little decline. But I think there's going to be some opportunities for buying sterling on the dip. Then 7 p.m. we've got the FOMC meeting minutes. This is going to be pretty interesting, depending on the tonality in the minutes, and see what they have to say. Are we going to remain hawkish, or is it going to be a dovish statement? It's all in the words, and what has been taken out and what's been inputted will depend on how the market reacts. The other thing that we've got North Korea testing missiles again, causing uncertainty in the market. Now, you see it says yen and gold rise on Korea worry. Well, it's an interesting headline because for new traders out there, what I want you to think about is something called risk on, risk off. Okay, I'm not going to explain it today. The reason I'm not going to explain it today is I want you to do a little bit of research. And when you've done your research, I want you to either email it or put it in a comment in the YouTube video. Okay? So what do you think risk on is, and what do you think risk off is? And how does this headline tie in? Okay? The other question I'm going to ask you to think about is, what do you think this could mean to the equity market? Okay, so a little bit of homework and see how much attention you guys are paying. And also, this is good for you. It's a little exercise. Alright, let's move on to the charts. Okay, dollar index, it's not really moved from what we were talking about yesterday and the previous week. The market is at support. We've seen dollar bulls coming into the market. The question is, are we going to get a retracement up to the top of the channel, or are we just going to come into that cluster of candles previous few weeks? Somewhere in that mid-range of the channel. Well, this is where it'll come down to probably NFP on Friday and what sort of numbers come out. Good numbers, and we'll probably see a run up towards the top of the channel before we see that dollar correction. Poor numbers, and we're probably going to see a little bit of a rally up before we see the dollar sell off again. So if you're in positions like myself, which would be Euro short and Swissy long, then coming NFP, you probably want to be considering your trade management if you haven't hit your target one, or you haven't got your stops to break even, or you haven't managed to reduce risk in the market somewhat. Okay, so that's something else for you to think about. So this is how we entered the euro dollar. You can see the hanging man pattern. Now this was taken on a smaller time frame, but I did highlight the hanging man pattern when it completes, which would be a sell underneath Friday's low. So other traders should have taken that. Now, if you're wondering what those red lines are on the chart, I've put those in for areas that you should potentially think about targeting. You can see where the market has basically created a supply zone or demand zone. So these are going to be specific areas where buyers or sellers will potentially re-enter the market. So this is where you want to be looking at taking money out of the market if you're already in this particular trade. So look at those levels, make a note of them. Really the middle one could be a little bit higher, somewhere in this region, just above I don't know, 1.1140, something like that, I think would be a little bit more relevant. Okay, looking at the yen, I mean, you saw in the headline that yen strengthens. So throughout the night, we saw that yen has sold off again from that trend line, but dollar strength seems to be prevailing this morning. The completion of the hanging man would be a sell underneath yesterday's low. The downside to this is if you look at the sell underneath yesterday's low, where would you target? Would you target that short-term trend line? Would you target the lower trend line? And if you're targeting this, then there's no reward, so there's no trade. So, in all honesty, right now you sit out of this market, if it's my opinion. There was a trade in here yesterday off the 4-hourly. We got stopped at break even. It did move in our favor initially. We got 40 points up and then moved our stops to break even. And that was it. The market stopped and reversed. The dollar strength came in. But the trend line is holding. So the question is, are we going to break through the trend line, or are we going to come down to this little support? So eventually, or technically, I feel that the market is going to break to the upside. So I will be looking to buy on dips. I think out there, the best chart to be looking at to be buying against the yen would be something potentially like the Canadian dollar, because that's the one that's been extremely strong in recent weeks. So look for a pullback on CAD yen to get long. Kiwi dollar, I mean, this is doing, it's rather infuriating really, but we're sitting in profit. It's doing not what we want, but it's sat up there, it's stuttering, it's stalling. We've got accumulation and distribution probably taking place. We need to see a break of that little blue box, and then we've got pretty much uncharted territory all the way down. So you can see our first target around 7,200, which you've got a nice little bit of structure there, and then the next lower one down, 69.30, somewhere around that. So we've got plenty of profit on the table to be had here, but we just need to see that. We need to see that push and that break below that 72.60 area, 72.70, before we know we're going to potentially hit that target one. Okay, so dollar CAD, we had another push down yesterday. CAD was strengthening. We've got a little rally on oil still. Oil's been pushing all week from the lows, which we called last week, from 43.20. Yesterday it went up to about 47.50, so that was a $4 gain. There was a good 4% return to be had on that particular trade. I still think there's maybe a little bit more room on oil to go up before September seasonals. Question is, are we going to see, was yesterday's move, was it going to be a false break? Are we going to see it continue to drop? Are we going to see a reversal? I don't really want to be selling where we're at right now. If you look at how far it's dropped, I need to see some sort of rejection before I'm starting to buy again now. This market is overextended, and we'll wait. I quite like the area of 132.80, 132.70. If we can get a rally up into there, which would be a retest of the counter trend line, and that 61.8 zone to take it short. If we get the opportunity to get long and take the contrarian trade, well then fantastic. But I won't be forcing that trade. Last but not least, gold. We got the bounce at the 1272. Is it a particularly clean chart? You've got the inverted hammer. In order for this to be a morning star, today's candle, is going to have to close midway through Monday's big black candle, which that's taking a lot of asking to do, and you would expect then the market to rally to the upside. When we see those huge candles like Monday, I'm not so keen to trade on the back of that, so I'd rather than see the market decline and come back down, test that 1220 level again, and another rejection, show that level is going to hold before getting long. So I'm going to sit on the sidelines on this chart for now. Okay, that's it, guys. I know I keep talking about the meetup for traders, but the emails coming in shows that this is something that a lot of you are looking for. So please, ask if you can share this video with any traders you know. Hit like, comment in the comment boxes. Drop us an email, info@phoenixblue.co.uk. We got about 10 of those emails in yesterday saying that you'd love to attend a meetup. Um, we're looking for the numbers to jump up a little bit more. Once we get those numbers in, we'll start organising, booking this as a regular event, and it'll be something that you'll benefit from massively. So let's get interacting, guys, and we look forward to meeting you. There was a decent uptake yesterday on people hitting our Facebook and Instagram channels. So if you haven't already, to get onto our Facebook and Instagram, it's Phoenix Blue Trading. Okay, have a great day, guys, and do remember it's non-farm payroll week, so we're probably going to see a little bit of stagnation throughout the week. I mean, maybe the FOMC is going to, the minutes tonight will bring a bit of volatility, and then 1:30 tomorrow the ADP. But I think pretty much most people are going to be sitting on the sidelines waiting for Friday's numbers. Okay, have a great day, stay disciplined, and I'll see you bright and early tomorrow.